Treasury bond prices have, well, tanked is the fair word to say following Donald Trump's win, but have they fallen too far? 10-year yields back above 2%. Welcome to Trading Nation. I'm Brian Sullivan. Dennis, Davitt, and Matt Maley are your team. Dennis, I'll begin with you. A big backup in bonds. Obviously, they started beforehand, but really we've seen about a 17% move in the 10-year yield since the election. Where do you think they're going to go from here? What do you make of the move in bond prices?
Well, I mean, Matt's much better at this from the technical point of view, but what I'll do is speak to it from a structural point of view. And one thing a lot of people are not saying is, if there is a change in regulation, the biggest buyer of bonds for their balance sheets has been the banks. So the banks may be unweighting a lot of the banks' excess capital that they've had to hold. They're forced to hold these bonds. So if they're liquidating these assets, that could make things very interesting with the knock-on effects in the fixed income market and where yields go from here. I mean, could bonds continue to go lower? Are they oversold? There's a massive rebalance going on amongst everyone's portfolios. Apparently 72 hours ago, everybody thought their portfolio was perfectly well balanced, and now everybody has to move their ratios of bonds to equities completely in the other direction. So it could continue to spin lower. I do think that this is a forced trade. I think people are having to make this trade. I don't think people are choosing to make this trade.
Well, how long will that shift last, Matt Maley?
Well, I think it won't last much longer on a near-term basis, and that means over the next couple of weeks, or at least the next week or so. And the reason for that is that on two issues to look at. Number one is sentiment. The DSI, Daily Sentiment Index, shows that bond futures traders are only 6% bulls, only 6%. When you get down to the 5–6% range, you rarely see that, and that's usually followed by a bounce in any asset, treasuries or anything else. And you also have the COT, which is the Commitment of Traders data, which actually shows the actual trading positions of these guys. They were getting short coming into this week, and a week ending Wednesday, that is. And I got to think, after what's happened the last few days, they've gotten more short. So you have kind of everybody at one side of the boat, making us very ripe for a bounce in the bond market, which will be a sell-off in yields. And especially when you have, as Dennis talked about, when you have forced selling. When you get forced selling, once that subsides a little bit, you usually hit an air pocket higher. So again, this is not something I'm calling for over the longer term period, but we could see something over the next week or two where bond prices do bounce somewhat significantly and the yields come down.
Basically, the super tanker is turning this week, but this will be the week the super tanker turns.
That's what it seems like.
All right, Matt and Dennis, thank you both very much. Folks, reminder, check out the live version of Trading Nation in the 2 o'clock Eastern Time hour of Power Lunch. We'll see you there for that as well, and we'll see you right back here next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.